Hi, this is Randy Finney with Right Side of the Chart, and this is a morning market update for Thursday, October 11th, 2018. I wanted to do this one for the members, get it out there, and tell you really just a very quick recap on the market since I did an update last night, and there's not much new to report. We did have a little slide in the futures after the close yesterday, so I'll touch on that. But just a very quick rehash. Again, this is a 60-minute chart of QQQ showing that we had a near perfect play out of the bear flag pattern. So what I'm doing here is reiterating my case, my expectations for a bounce. And again, I'm not going to dismiss the fact that anything is possible. The markets are of course in a very precarious position. We've had a lot of technical damage done this week, and I think that technical damage, as I continue to state, will play out for more downside in this fourth quarter of the year, possibly even beyond into 2019. But for now, let's just let's look at the very near term, and if things change, I'll change my view. But as of now, I think there's a good shot we'll get a bounce today, close green, possibly also another green close tomorrow. And so that's what I'm looking at now. I've had a couple questions, well, quite a lot of questions put to me recently, and one of them this morning. No, I don't think it's a good time for SQQQ or any shorts. And I may be certainly wrong on that, but trading is all about risk versus reward. You don't want to risk $1 loss for $1 of gain. You want to, do better than that. And when the markets are down this much, this oversold, let's just move on to the daily charts. Everything that I talked about last night. Uh, as I always say, oversold is not a buy signal, and oversold can certainly become more oversold, just like overbought during a bull trend tends to become more overbought or stay overbought for a prolonged period of time. However, the trend so far, we're still above that long-term primary bull market uptrend line. So that hasn't gone yet. These are what we call, or I'll call intermediate term sell signals now. If we start shattering the weekly charts, weekly closes below the bull market uptrend lines, and we're dancing on them now. We're not that far away. But usually, like I said, usually you come down, a pretty big drop, first tag of support. A lot of these trend lines, first time they've been hit, since earlier in the year, usually you get a reaction first. So we'll see. I think we'll see some dip buyers come in today and buy their beloved Apple and Amazon and all that good stuff. And again, when I look at the charts, I look at QQQ. I see, as I mentioned yesterday, a little more downside to the next supports hit, about 1.2%. Futures were down, a good 1% or so over the night last night. So they continue to build on their losses after the close today. So they may have come in, or I'll get to those charts in a second to show you whether they tagged them or not. They're very close. So again, my preferred scenario, I'm probably 50-50 on whether we get a pop down after the open. We're currently indicated a gap lower, but I'm talking at the open, maybe a thrust down, another run down. Looks like we're going to fall off a cliff. More shorts pile in, more longs get stopped out, and then a reversal. And that's why on the TQQQ trade I set, and I know it does open the door to allow for a greater loss than the stop. But usually those reversals, if they're going to happen within the first 30 minutes of trading. Um, Sometimes it takes a little bit longer, but I think by sitting back, letting see what happens, let the dust settle, let everything sort itself out, you'll probably see some pretty good volatility at the open today, one way or the other. Could be up or down, and then trading will hopefully, or I expect it'll normalize sometime after the first half hour, at least hour or so of trading. And so here it is, QQQ long-term trend line. This is what I'm watching. And again, everything I see tells me these trend lines will go. Can you smash through it right away? Absolutely, you can. But usually, like I said, some buyers come in and step and defend that 200-day moving average and the bull market uptrend line. And again, on a weekly chart, it doesn't matter what happens today. Doesn't even matter what happens early tomorrow. It only matters how we close. So if they can park it here or above, then that is so far a successful defense of the weekly support line and that weekly 40-week moving exponential moving average, which is, by the way, the same as a 200-day moving average. But again, it's not uncommon when you look at it on a daily basis or a day-to-day basis to see it undercut during the week and then snap back up. So that's that. That's QQQ. SPY, same story. I mean, SPY played a game of catch up. SPY was well above that trend line. So there it is. This is the long-term bull market uptrend line on SPY. I've covered it many times. There's that 200-day, or I'm sorry, 40-week moving average just below, the little horizontal support. So like I said, normally if we didn't have these big divergences in place, I would be, buying with both fists right now, stepping in there, going long for more of a longer term swing trade. But I'm trying to game a bounce, and I'll have to say this: it is, sort of the old trying to pick up nickels in front of a steamroller. But that's how I trade. When volatility's high, one just quick pop, one little counter trend bounce, back up. It could be in QQQ could easily be 2-3%. That's a pretty nice quick trade if you can get in and out. But again, if it's not your cup of tea, stand back, ride out any counter trend bounces if you're short. Or wait for the next objective entry, whether it is long or short. So there's SPY. Again, I just want to cover these levels. Daily chart, pretty good level there around 279.67. And yeah, we closed below it. I talked about this being a possible momentum fueled overshoot. I do expect a reaction there. So whether we come down early in the morning, I expect to close up or above that level today or tomorrow. And if we don't, things could get ugly. Maybe there are some things broken in the market, some funds blowing up, more pent up sellers. And if so, like I said, I don't have a lot of support. I have a minor support level here, about 274.23, but we could go all the way down there. So there could be more downside. Like I said, you just have to stay flexible. There's that trend line that got smashed yesterday on SPY, but also you can see that horizontal support there around 279.50ish. And we closed a little bit above it. Will we regain it after the open today? I mean, like I said, we're going to gap down a little bit today. Unless, I'm doing this video, it's still over an hour to go before we open, so anything's possible. But all right, that's that. I want to just show you that, and let's look at the futures real quick. Oh, I didn't line this chart up yet. All right, let's drag it over here, move that over there, and size this. Sorry, should have had that ready to go. Let's see, get that down here. There we go. All right, S&P 500 futures. These are levels I have here. I have a support, like white horizontal lines are there for reasons. They are support. I've been pouring over these charts all night. There's reactions from above, one from below. I mean, one from above, several from below there. Just reactions along the way. So a level that I think is certainly a valid support level. And again, if you zoom in, we're just a hair above it. So like I said, another thrust down at the open probably do the trick. And then of course I have another support level below there. So to try to quantify it, oh, here we go. You can see we came very close to that level in reverse so far, but let me measure it out for you. It would be from where the futures are now, roughly, if I grabbed them right, about another 1.3% drop on the S&P 500 futures. So let's look at QQQ, or NQ, I should say, the NASDAQ 100 futures. And there it is. I have to zoom out a little bit. There's that trend line, well-defined trend line. It sliced right through it yesterday, and so far today, pretty well below it. Now there's support below, and this is again why I think that the potential, the profit potential on a short, that's why I maintain it's still just not worth it. It's relatively low, relatively speaking. When I say relative, volatility's up. So normally you might say, 2%, that's a big move in spot Qs. Yeah, it is, but not relative to what we've seen lately. It's dwarfed by yesterday's move and the move down so far. Volatility's high, so you got to expect at this point in time, expect these 2% daily swings, for at least the near term going forward in the NASDAQ 100. So there it is. Downside's about from, again, roughly where the futures are at now, about 2% on NQ before you hit a pretty decent support level. And if we bounce up, if you're looking to short, try a short on that trend line. I'll have to look at some other levels right now, but I'll follow up with some more later. Okay, other things that I like right now. Gold, I continue to watch this one closely, very closely. We're long officially on the site, platinum and GDX, but to see those really take off, you're going to need to see gold break out. Gold is, the 800-pound gorilla of the precious metals, and of course GDX will follow it. And there it is. I've been harping for many weeks now on 1213. That's the horizontal line there. Capped all these, con- controlled all these pullbacks there. That support broke. Then it became resistance. A lot of reactions there. And then the downtrend line there as well. We're pushing against that downtrend now. I'm, liking it more and more. I've laid out a scenario that if we can't break out soon, we'll go down, and there's a potential here for this is a daily chart I just flipped to on gold futures. This is my worst case scenario. This is my bearish scenario, but it's still a bullish scenario, and that's a divergent low. One more thrust down gold, washout move in the euro, spike in the dollar, blow off top. That would probably cause that, and then you'd have a lasting reversal with nice bullish, positive divergence here on the daily time frame. So again, my preferred scenario is we break out there. Alternative scenario and anything other than that, I'm just plain wrong. So let's just look at the euro real quick because that I'm probably as or more concerned about the U.S. dollar, the outlook for the dollar and the euro, than I am for gold because I know gold will follow. Gold, I've put up many charts in the past that show you the unmistakable inverse correlation between gold and the U.S. dollar. So here's my proxy for the dollar, the euro-U.S. dollar pair. I'm going to cover this recently. 60-minute chart. You can swing trade these just like equities or anything else. Technical analysis works. It's amazing on just about anything you can chart, put up prices on. You can apply technical analysis to it, especially in obviously financial assets. But there's your divergent high correction. We had a divergent low here. It led to a little pop, but that divergent low just simply extended. I actually need to put that down here. This is just an extension. You can see the divergence lines down here. And then boom, we broke out. I highlighted this the other day. We broke out, back tested that little wedge right here. Then we took out 115.306, which I think it was yesterday I said we needed to take out. That'd be bullish. So far, so good. Looking good. Euro and the dollar and gold still have some work to be done. That I have to say. But here it is. I laid out a scenario back months ago about a bear trap scenario where we break this. This is a key support level. These horizontal lines right here. You can see it going back for a while. And so I laid that scenario out, and it played out. Bear trap, false breakdown, whipsaw signal, whatever you want to call it, move back up. But then we got another one, and again, they call me stubborn, call me persistent, but this is, what I'm seeing in the charts. And so I said, look, we may get another one, and so far that's it. We broke it again, and we regained that level again. So the euro bears, dollar bulls, they just can't keep it and pull it keep it down below this level. And so that's that. And the longer term outlook, if you're new to the site, if you're from the YouTube channel or anywhere else, I don't post analysis, gold, currencies, everything but general broad market analysis is private content for the subscribers. Here's my long-term scenario and why I'm looking for a major top on the dollar, a major bottom in the euro. This was a multi-year basing pattern right here. We broke out there of that multi-year basing pattern. We had strong bullish divergences at the lows, broke out, had a strong rally. That set up nothing can go up straight up forever. You get overbought. And so we had this wedge type pattern that broke down, which triggered this current correction, which simply brought us back to retest the top of that pattern. That's these two horizontal lines right there. It really is a support zone that defined the top of that trading range. So we tested it once, tested it again. The correction was priced into the charts, but again, I view this as just a correction, really the first counter trend pullback in the euro US dollar, and then we come up, and if we can take out that 127-ish level going on, I mean, even if we get back up there, I can tell you that'll be a hell of a rally in gold because that would be a heck of a drop in the US dollar. Longer term, if we take it out, that's good night US dollar, hello gold. And here's GDX, still an official trade, still plenty of meat on the bone, but I keep getting questions on it. I think it's fine to have a partial position because that's what I do because I'm pretty confident we'll get that breakout. A couple points to make mention. Sometimes I'll use those leverage ETFs, and I've done this in the past. I don't want to go too long in this video. You can check this out. When we had that explosive rally in gold or in the miners back in 2017, we had a couple in recent years, but this one, 2016, and I've done this in the past, and I traded it, so I can tell you, just take a measuring tool, measure that rally, and then measure Nugget, and you'll see. Actually, I could do it in just quick second. So that was 160%, give or take, just ballpark figure. And there's Nugget 963%. You might say, wait a minute, how is that possible? If GDX only went up 160%, go to the FAQ page on the site. Read, I wrote about this years ago. It's very simple. That leverage ETF, I talk about the decay, and it is a bad thing, but it's a great thing at the right time. When you have a unidirectional trend, the math works in your favor. In other words, you did much better than 300% or three times the underlying index because this was a what I call a fairly unidirectional trend, just as this was. This is when you want to be long dust, and here is exactly when you don't want to be long either dust or nugget, and right now. So the reason, because we hadn't had broken out and I could see some consolidation, that's why I went with GDX on the official trade, because when you do this right here, this is when you do not want to own leveraged ETFs, especially three times, especially with volatile securities like GDX, gold mining stocks, which move a lot. The decay will eat you alive. Don't believe me? You want to see an example of decay? I just showed you how it works in your favor. Now let's look at, doesn't matter whether you pull nugget or dust, clean board. Go back to when they came out here, daily, weekly chart. Here we go, weekly chart. All right, so let's say you bought nugget back in 2011 or so when it came out. You know how much money you'd have right now, or how you'd be down 99.92%. Almost all of the money wiped out. Well, okay, well then you want to own dust, right? Wrong, because if you bought dust also back in 2011 when it came out, you'd be down 96.48%. Almost all your money gone. How is that when over that period of time GDX went down, same point in time, roughly grab right around there. GDX dropped 68%. How's that possible? That's the decay I talk about. There's periods of consolidation, and so you have to be selective and get your timing right when you use a leverage ETF. So that's why GDX is the official trade. That's why I'm fine with TQQ now, because win or lose, that TQQ trade that I put out yesterday will either be most likely be stopped out or hit the profit target by, let's say, Monday latest. That's my expectation, and that's why I have no qualms using that leverage ETFs for this trade. I do not plan, and almost certainly will not be in that trade for more than a week. I'll probably pull it if it's there a week from now and hasn't hit the stop or target, but I very much doubt that. All right, moving back on. I'm sorry to digress, but those are important points I think in trading. I wanted to bring those up, and I know I always have new members coming to the site. This is GDX. Here's I pointed out an inverse head and shoulders bottoming pattern on the daily time frame. These are best used on daily time frames. You can try them on intraday, but daily and weekly charts, you want them to span at least a few weeks, better if they're a couple months. And it is perfectly normal to have two right shoulders or two left shoulders on an inverse, or two of each. You could have two left, two right shoulders. So right now, that's what this could be. And as with every chart pattern, it is only a potential pattern. It's not a buy signal until you have a breakout. So right now we have what could be. I'd need to put a RS2 right here, relabel that. Second right shoulder, a break of the neckline. And if you trade head and shoulders patterns, what you do is the widest point of the pattern, that is from the neckline, that's this yellow line, down to the head. You take that, I have to do it to give you a better number and give you the measured target. We played around yesterday with the bear flag on NASDAQ 100 on QQQ. So there's your widest point of the wedge. You add it to where that breaks out, and whoa. It never fails to amaze me. More often than not, these targets will come in pretty darn close, or if not right on, key resistance levels, and you can see that there. That's a very, very important resistance level on GDX. That measured inverse head and shoulders pattern measures right to it. And let's see, where's our targets at? Let me see where. Okay, here it is. Yeah, final target's the resistance at 2175. I set the target at 2169, and that was a daily chart, and that is, yeah, so we're a little bit above that, and I may revise that. I'll watch the charts, but I think we can get up a little higher than that. In fact, what I'm looking for, this breaks out and gold breaks out, is quite likely this could morph into a trend trade where we hold it for more than just these swing targets. We tuck this thing away instead of a few months, few weeks to a few months. We could be looking at a trade that could last a year or more, with much higher price targets, of course. I almost forgot. When I was on the broad markets, I wanted to do this update on the VIX. I've thrown this out in the trading room a lot. I've been tracking this for a long time, for a couple months now, talking about these divergent lows, the divergence just extending. It's another great example of how the divergences, as long as they're intact and everything looks good, they play out sooner or later more often than not. I always say more often than not is not always. It means, in my opinion, from my experience, I should say, probably a good 90% of the time, if you have clean divergences and well-defined trend lines and other developments, in this case bullish developments, they play out just like those divergences played out in the broad market. And it's not even remotely close to coincidence that this played out right around the time the S&P rolled over and finally broke trendline support, and tech broke. Everything I said would have to happen for the market to roll over. So you have VIX charts, and this is VXX, an ETN, an ETN that tracks it. But it's going to mirror the S&P roughly in reverse. So you have that trend line break, then the impulsive move. Point I wanted to bring up is this is a target I laid out recently in trading, where I laid out these resistance levels, and I showed, and I posted this in the trading room today for somebody who asked, should they sell it? I did. I had VIX across some IRAs, longer term accounts, this VXX stuff, and I sold it. And that's what I think will happen. I think if this will align with my thing in the market. We'll get a little pop. Within the next week or so, we get another short entry on the market, especially if we can get a nice pop back to some good resistance levels, and then go up and hit my next target there at 39.59. And at some point, if this correction gets ugly in Q4, which I think it will, maybe into the first quarter next year, we'll probably come all the way up here, hit these longer term targets. So there's VXX, and and one more thing, and I'm all over the place in this video, but I wanted to kind of do a broad-based thing. I had alerts going off like popcorn yesterday, and I talk about that a lot. I can go weeks. The market's kind of been grinding up, and then all of a sudden everything starts hitting support. So it's not coincidence, in my opinion, yesterday. So VIX, you can see, hit that target I had almost to the button, closed at 34, 33.92 is where my line was. You'll recall we hit our target on TWM. Remember, these are targets and lines that I put up back here before this thing even broke out, or right after. I can't remember if we took it before. Yeah, I think I added this before it even broke out. Yeah, with a move over 1363. That was a trigger. I wanted to see this horizontal line go. And so it's not, again, I've done this many years, and it's not mere coincidence that all these, I had stocks that hit targets. There's TWM, hit my, final target to the button yesterday, and more so right at that level, 1576. When I highlight the pop-up box, I always set on longs, I set the targets just below the actual resistance level, just in case it reverses shy. I don't want to miss a fill. And so I meant that we closed 1 penny, 1 penny from that actual resistance line on there yesterday, and that was, what was the high? The high, 1577 we closed at, yeah, and the line was at 1576. Okay, so that's that. One more, what was it? Nike hit the price target yesterday, and I still, usually get a reaction on the first one. I think we might have had some others as well. Okay, I'm looking at the time on this video. I'm going to have to wrap this thing up so I can get out to you guys before the market opens. A couple other things to watch. Remember, you know, there's always trading ops. There's always places to make money, even if you're not a short side trader. I understand some people do not like to short stocks. They don't know how. They don't have the comfort level. They think it's anti-American, whatever the reason is. No problem. There's always, something to look at here. Somebody asked me recently about Bitcoin, and what I pointed out were three levels. I pointed out this top of this trading range. I basically said Bitcoin, since this divergent high right here and breakdown, had an impulsive correction right there. Since then, I had said it was in this trading range right here, defined by 67.98. We'll call that 6,800 at the top, and down to about 60, 65 at the bottom. And so they asked me right here, what do you do? Well, I said, we have so I highlighted the range there, and then this level here, I said we had a trend line here, and there's the only trades I see in Bitcoin in a sloppy range. You either short at the top of the range, you put on a short here and go down, or you position for a breakout of the range. That's option number two if you think you're going to get a breakout, or if you get one, or you buy on a pullback to the bottom of the range. So yesterday we hit that, overshot it briefly, and you can still go long. The closer you can buy it to the bottom of the range, the better off you are, and you simply then set your stop slightly below, allow for those little momentum overshoots or stop rates, and you swing it back up, potentially to the top of the range. I'm not I'm watching Bitcoin for now. I've been trading it in the past. I've traded it pretty actively. I use these futures, by the way, guys. Sorry if I didn't clarify. GXBT, those are Bitcoin futures. But there was a trading up when that trend line broke, back test, or yeah, a little kickback rally and a drop. So that's one trade idea. Not my favorite, but again, I'm just throwing things out there that I'm watching, especially alternatives. What else do I have for you? Nat gas, I mentioned this in the trading room recently. Big divergent high recently right here, and so far pretty nice slide down. I think all these levels again, you can just use the search function. Make sure you type in uppercase, and if you use futures, put that forward slash in front of it, so you have forward slash NG in capital NG in the search function, and that'll pull up those. Because a lot of things like this, these are futures and they're quick trades. They don't make nat gas is it's a very I actively swing trade it. Is what I'm trying to say. So don't often. I have put some of the ETNs on the trading room. I'm sorry, as official trade ideas, but I never put futures. I know a lot of traders don't have access to futures. So if it's official trade idea, it has to be an individual stock, ETF, or ETN. And so DGAS and UGAS are some of the two popular. They're leveraged. But again, I wanted to point this one out because I mentioned this one the other day in the trading room. 3253 was support. It's been taken out. That opens a door for a move all the way down here to eventually to that 310.08 level. Maybe put a stop. It would have been best if you could have shorted the break or shorted the divergent high, but maybe a stop somewhere above there. And the other one's crude oil. CL crude futures. This has been a beautiful trade. I had some nice trades. I mentioned I've been updating this in the trading room. Divergent high right here, just like we had divergent highs in the past. Then we had a trend line break. We had a back test, and this was nice. This is where I mentioned it most recently, around 74.90. So what you had there is a very well defined or pretty well defined support slash resistance level. So when we had this breakdown, we back tested right above, we popped above it, and I mentioned got to wait till it fell back above there, which it did. It briefly popped above there, back tested the trend line, and then failed on that, trying to take out, flirting around with that 74.90 level. Crude's volatile, so you're going to trade a little through. You can see some chops above and below that level. And once we couldn't take it out, or CL couldn't take it out, boom, nice move down yesterday, and that was my first target. So I was out there, but I mentioned that would be the next target here, this trend line. And again, you can just see how well the technicals work on crude. It is certainly, I mean, it's a tough sucker to trade at times. You have to watch out for the inventory reports, be aware when they come out, because that causes quick spikes. But other than that, in between there, it trades very well to the technicals. You can see how the buyers stepped in right at that trend line. That's the first reaction since all the way back here. So a lot like the stock market, when you haven't visited a trend line in a while, even if it's going to break, which it may go ahead and do, you get an initial reaction, I should say, on the initial tag, and that's what's happened so far in CL. So if you didn't cover there yesterday, it's 72.70. You had another shot to cover here. At this point, it's oversold and at support, and then support just below. I would not short it. In fact, I may even go long CL here. I have to look at the shorter term charts. So that's it. I'm going to wrap it up here. Futures were starting to make some, as I was doing the video, starting to make some headway, and then got smacked down a minute ago. So we still have about 40, a little over 40 minutes to go before it opens, so I'll get this video out to you as quick as possible. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.